Hi professionals, welcome to Tax Guru YouTube channel. This is CA Rohan R. Pingay, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Mars Network. Welcome to our video series, What Law Says. And today we are going to discuss cases reported to High Court under GST law. Let's dive into it. Let me allow to share my screen. What law says? Indirect Tax Part 4 GST. First case, Vinayak Motors versus State of UP 2025 418 Allahabad High Court, date of order 24th March 2025. Relevant section is section 29 subsection 2 of CGST Act 2017. Let's understand facts and issue of the case. Vinayak Motors registration was cancelled by the GST department. The cancellation was based solely on non-response to a show cause notice. The order of cancellation lacked any specific reason or reference to violation under section 29 subsection 2 of the CGST Act. The petitioner challenged the order stating it violated the principles of natural justice and statutory requirements. Issue was whether cancellation of GST registration merely for non-response to a show cause notice without recording any finding of violation is legally valid or not. Let's see what Allahabad High Court observed and held. The court observed that cancellation under section 29 subsection 2 must be based on specific violations such as non-filing of returns, fraud, or contravention of GST provisions. These are the mentioned specific violations are mentioned in section 29 subsection 2, and they are non-filing of returns, fraud, or contravention of GST provisions. There were nothing is covered related to non-response to show cause notice. It reiterated that non-response to a notice by itself is not sufficient ground unless supported by recorded reasons and findings. The order must reflect application of mind and disclose statutory grounds justifying cancellation. The High Court set aside the cancellation order. It held that an order without specific findings, what it held is that order without specific findings or legal basis is arbitrary and unsustainable. Directed restoration of GST registration and emphasized adherence to the proper procedure and principles of natural justice. At the end of the session, we are going to see conclusions based on whatever case laws we have discussed today. So please stay tuned till the end of the session or end of the video. So we will grasp the one-liner conclusions we can conclude from that the cases discussed today. Next, Solvi Enterprises versus Additional Commissioner Grade 2, 2025, 173. Again, Allahabad High Court. Date of order is 24th March 2025. Relevant sections are section 67, 74, and 130 of CGST Act 2017. Let's understand facts and issue of the case. A search under section 67 of CGST Act was conducted at Solvi Enterprises. Goods were found and stored at location not declared in GST registration. What happened is that goods were found stored at location not declared in GST registration. Department initiated confiscation and penalty proceedings under section 130 alleging intent to evade tax. Issue was, can goods stored at an undeclared location without additional proof of intent to evade tax be confiscated under section 130? This was the issue actually, is that goods stored at undeclared location, however, without additional proof of intent to evade tax, whether the action of confiscation is correct or not. Let's see what Allahabad High Court observed and held. Section 130 is a serious provision and requires clear intent to evade tax. It is specifically mentioned in the first line is that Section 130 is a serious provision and requires what? Clear intent to evade tax. Mere procedural lapses, means that was the procedural lapse we can say. Mere procedural lapses like non-declaration of premises do not justify confiscation. Non-declaration of premises is not an intent to evade tax. It is just a procedural lapses we can say. Proper adjudication under section 74 should precede any confiscation. The department failed to provide evidence of mens rea, that is guilty mind. Confiscation proceedings were quashed. Court held that intent to evade tax is essential for invoking section 130. Directed the department to release the goods, no coercive recovery unless adjudication under section 74 is concluded. Next, Gujarat Chamber of Commerce and Industry and others versus Union of India and others 2025, TIOL 48, High Court Ahmedabad, GST, date of order 3rd January 2025, and relevant section is section 54, subsection 3, and rule 89, subrule 5. Let's understand facts and issue of the case. The petitioner, including Gujarat Chamber of Commerce and various trade bodies, challenged the constitutional validity of Rule 89, Subrule 5 of the CGST rules. Rule 89, Subrule 5 allows what? Refund of input tax credit only on inputs, that is goods, and not input services for inverted duty structure cases. What Rule 89 Sub-Rule 5 allows is that refund of input tax credit only on inputs, that is goods, and not input services for inverted duty structure cases. They argued this violated Article 14, that is right to equality, and was inconsistent with Section 54, subsection 3 of the CGST Act, which doesn't distinguish between the goods and services. Issue was whether Rule 89 Sub-Rule 5 by excluding input services from refund under inverted duty structure is ultra vires the CGST Act and violated of Article 14 of the Constitution. Very important case law. Let's see what Ahmedabad High Court observed and held. The Gujarat High Court recognized the disparity between Rule 89 Sub-Rule 4 used in zero-rated supplies and Rule 89 Sub-Rule 5. It observed that Section 54, subsection 3 of the CGST Act uses the term any unutilized input tax credit, any unutilized input tax credit, which includes both goods and services. Section 54, subsection 3 use the term any unutilized input tax credit. It nowhere mention or exclude input services, ITC on input services. So both goods and services are covered. The court noted that excluding input services from refund violates the principle of neutrality in a value-added tax system. The rule creates an artificial distinction between two similarity situated taxpayers, those exporting and those dealing with inverted duty structure. The court declared Rule 89 Sub-Rule 5 as ultra vires to the extent it excludes input services from the scope of refund under Section 54, subsection 3. It directed the government to reframe the rule in line with statutory provisions, ensuring both input goods and services are considered for refund in inverted duty cases. Please note down this case, this at least interpretation. Be keep in mind. At least you note down whenever you listen this. Wherever these are the important cases we are discussing. This is completely important. So now next time onwards, whenever inverted duty structure you are using input service credit, you can claim it. with reference to this High Court case. Next, M-Trade Links versus Union of India 2024, 163, Kerala High Court, date of order 4th June 2024. Relevant sections are section 67 and 83 of CGST Act 2017. Let's understand facts and issue of the case. M-Trade Links challenged the provisional attachment of their bank account under section 83 of the CGST Act. The attachment was made without prior notice or hearing, solely based on ongoing proceedings under Section 67, inspection and search. This proceedings was ongoing under Section 67, that is inspection and search. So they may attached without prior notice or hearing. The petitioner contended that the attachment hampered their business operations and lacked proper justification. Issue was whether the provisional attachment of a bank account under Section 83 without due application of mind and absence of valid proceedings is sustainable under law or not. Let's understand what Kerala High Court observed and held. The court noted that Section 83 can be invoked only when the commissioner has reasons to believe that such documents or such attachment is necessary to protect the interest of the revenue. It observed that such power is drastic and should be used sparingly and based on tangible material. It was found that authorization lacked specific justification in given case, and there was no adjudication or quantification of tax liability at that stage. The High Court quashed the provisional attachment order as arbitrary and unsustainable. It emphasized that the need for strict adherence to the procedural safeguards and judicial application of mind under Section 83 directed the release of the bank account, enabling the petitioner to resume its normal business operations. Next, Land TPS or Land TPS JV joint venture versus Assistant Commissioner of State Tax 2025 170 Telangana High Court. Date of order is 29th November 2024. Relevant sections are section 74 and 75 of section 4 of CGST Act 2017. Let's understand facts and issue of the case. L&T pays joint venture is a joint venture was served with a demand under section 74 of the CGST Act. The demand was raised without granting a personal hearing and without proper consideration of their reply. The petitioner challenged the demand, citing violations of principles of natural justice. Issue was whether issuance of demand order under section 74 without a personal hearing, despite request and a reply, is legally valid and sustainable or not. Let's see what Telangana High Court observed and held. The Telangana High Court noted that under section 75 subsection 4 of the CGST Act, a personal hearing is mandatory where an adverse decision is contemplated. It was observed that despite the petitioner's response, the officer didn't provide an opportunity of being heard, violating the natural justice. The court emphasized the statutory obligation to conduct a personal hearing before passing orders under section 74. The court quashed the demand order, holding it to be the violation of section 75 subsection 4 and principles of natural justice. It directed the department to re-adjudicate the matter and granting a reasonable opportunity of being heard to the petitioner. Next, Mrs. Lakshmi Periyasamy versus State Tax Officer 2025-170 Madras High Court. Date of order 25th November 2024 and relevant section is section 169 CGST Act 2017. Let's understand facts and issue of the case. The petitioner, Mrs. Lakshmi Periyasamy, challenged a demand order passed without proper service of notice. The only mode of communication adopted by the department was uploading the notice on the GST portal without sending it via registered email or physical delivery. It is also necessary mode of communication. The petitioner claimed a lack of knowledge of the proceedings and asserted that this was violated principles of natural justice. Issue was whether mere uploading of notice on the GST portal without other valid modes of service constitutes valid service under Section 169 of the CGST Act or not. Very, very important. Very, very much important. Nowadays, the technical is supported. They may upload whatever demand or notices on the portal and they may think that it will be a valid. Let's see what Madras High Court observed and held. The Madras High Court held that service of notice must be effective and in compliance with Section 169, which requires using modes reasonably likely to inform the taxpayer. That is more important factor. Means only uploading the notices or whatever communication on the portal is not a valid requirement from the department of point of view. What is important in this is that the proper communication to the assessee should be given. So modes are reasonably likely to inform the taxpayer should be thought in the mind of the department, its officials' mind. Merely uploading the notice on the portal is not sufficient, especially when no attempt was made to serve through email or other approved modes. The court emphasized that natural justice requires actual or reasonably assumed receipt of notice by the taxpayer. The court set aside the demand order as it was passed without proper and valid service of notice, directed the department to reissue the notice using proper methods and allow the petitioner to respond. Reiterated that procedural compliance with Section 169 is mandatory for any demand to be sustained in law. Next, Vigneshwara Transport Company versus Additional Commissioner of Central Tax 2025 170 Karnataka High Court, date of order 28th November 2024. Relevant section is Section 83 of the CGST Act 2017. Let's understand facts and issue of the case. Vigneshwara Transport Company was subjected to provisional attachment of bank accounts under Section 83 of the CGST Act. The attachment was initiated based on the allegation that the company was involved in supplying fake transportation invoices without actual movement of the goods. The petitioner challenged the attachment, stating it was unjustified and disproportionate and made without any concrete evidence or concluded proceedings. Issue was whether provisional attachment of bank accounts under Section 83 can be made merely on suspicion. That is the important thing of this case law. Means mere suspicion is sufficient or not without conclusive evidence or completed adjudication was the issue. Let's see what Karnataka High Court observed and held. The Karnataka High Court emphasized that Section 83 is an extreme measure and the most it will be at the end we will bring it. The impacts the fundamental rights of the assessee. Section 83 is an extreme measure that impacts the fundamental rights of the assessee. Such action must be supported by tangible material and there must be a reason to believe that the attachment is necessary to protect revenue interest. The court found in relevant case that the attachment was done mechanically without proper application of mind or demonstration of actual tax evasion. In given case, court found that the attachment was done mechanically without proper application of mind or demonstration of actual tax evasion. The court quashed the provisional attachment, ruling it was arbitrary and legally unsustainable, directed the department to release the attached bank accounts immediately. Reiterated that provisional attachment must not be used as a tool for harassment and must conform to due process and evidentiary standards. Next, LJ Victoria Properties Private Limited versus Union of India 2024 Central Tax 270 Bombay High Court date of order 19th November 2024. Relevant section is section 86A of the CGST Act 2017. Let's understand facts and issue of the case. LJ Victoria Properties Private Limited challenged the blocking of their input tax credit under Rule 86A of the CGST rules. What is the action of the department is they blocked the input tax credit under Rule 86A of LJ Victoria Properties Private Limited. They challenged this. The ITC was blocked by the department without any notice or justification, affecting the working capital of the company. Very much important. Okay. Blocking of the input tax credit will definitely affect the working capital of any business. The petitioner contended that such blocking was arbitrary and without adherence to the procedural safeguard. This was the contention of the assessee. Issue was whether blocking of ITC under Rule 86A without proper reasons and without affording the taxpayer can an opportunity of without affording the taxpayer an opportunity of being heard is violative of principles of natural justice or not is what issue. Let's see what Bombay High Court observed and held. The Bombay High Court emphasized that Rule 86A is an exceptional provision and should be invoked only with recorded reasons based on credible material. The court noted the absence of proper justification or opportunity to the petitioner, making the action procedural flawed. It reaffirmed that natural justice and due process are inherent in any action that restricts a taxpayer's financial rights. The court quashed the blocking of ITC, holding that the department failed to justify the invocation of Rule 86A, directed the authorities to restore the ITC ledger of the petitioner, reiterated that mechanical blocking of ITC is not permissible, and recorded satisfaction with supporting material is a prerequisite. Next, SBI General Insurance Company Limited versus Union of India 2024 Central Tax 158 Bombay High Court again. Date of order is 24th October 2024. Relevant section is section 7 of the CGST Act 2017. Let's understand facts and issue of the case. SBI General Insurance Company challenged a demand of demand for GST on salvage value of vehicles damaged in accidents. Okay, means department demand GST on salvage value of vehicles damaged in accidents. The SBI General Insurance Company challenged that demand. The department alleged that GST was payable on the sale of salvage even when the claim was settled with deduction for salvage. The company argued that salvage remained the property of the insured, and hence it didn't constitute the supply by the insurer. Very much important. Please note, what company argued is that the salvage remained the property of the insured, and hence it didn't constitute a supply by the insurer. Issue was whether GST is payable by an insurance company on the salvage value of damaged vehicles when the claim is settled after deducting salvage value and the salvage remains with the insured. Let's see what Bombay High Court observed and held. The Bombay High Court examined the insurance contracts, okay, and the terms under which claims were settled. Very important. We have to examine such contracts if made and understand the terms of it whenever we any case we were going to defend for our clients or any other. It found that where the claim is settled after deducting the salvage value, the ownership of the salvage value remains with insured or not. It found that where the claim is settled after deducting the salvage value, the ownership of the salvage remains with the insurer. This is the finding of the High Court, that the ownership of the salvage value is with insured. The court emphasized that there is no supply of goods by the insurance company in such cases as defined under Section 7 of the CGST Act. The court held that GST is not payable by insurance company on salvage value ownership where ownership doesn't transfer to the insurer. Only in cases where the insurer settles the full claim without deducting salvage value and takes ownership of the salvage, GST liability will arise. This is very important. When GST liability arises, when the insurer settles the full claims without deducting the salvage value and takes ownership of the salvage. The demand was set aside for violating the basic principles of supply and ownership under GST law. Now, let's move on to the conclusions that can be drawn from the cases discussed today. First conclusion. GST proceedings initiated without issuance and service of proper show cause notice violate principles of natural justice and are liable to be quashed. You can take screenshot of it so that you can refer one-liner conclusions and keep it with you whenever you can come across with such type of cases. You can access that time. So next, mere storage of goods at an undeclared premises without proven tax evasion intent doesn't warrant confiscation under section 130, doesn't warrant intent to evade tax. Rule 89 sub-rule 5 is ultra wires for excluding input services from inverted duty refund. That's very much important. Provisional attachment of bank accounts must be backed by valid proceedings and cannot be invoked arbitrarily. Sorry. Non-grant of personal hearing before adjudication under Section 74 violates natural justice. Uploading notice only on the GST portal without effective service invalidates the proceedings. Again, important. Provisional attachment under Section 83 requires what material evidence and cannot be based on suspicion alone. Blocking of ITC under Rule 86A without due justification and reasons is unsustainable. GST is not payable by insurers on salvage unless the insurer takes the ownership of it. That's it for today. Thank you so much for patient hearing. Hope you are benefited from all these video series. I have already started 3 video series on Tax Guru YouTube channel. Please note down my contact numbers. If you have any queries, suggestions, observation, please let me know through email ID or whatever communication you think fit. And if you are not yet subscribed Tax Guru YouTube channel, then do subscribe it for latest updates. So we will be keep updated. As a professional, we need to be regularly updated on various aspects. And as a professional who are practicing in litigation or practicing a chartered accountant in any way, whether you are practicing, then update is must and we need to be, and this is what I think to so that I started these 3 video series, that is what law says. Under that, 1 is on income tax case laws we discuss. In second, just now we have discussed GST case laws, and third video series I have started for every one of Indian citizens, that is GST relearn series, where we discuss GST from initiate, means from basic to advanced, and that is also from a very basic language and understandable now. So let's meet in next session. Till then, see you soon.